John Mitchell, CEO, co-founder of Episode 6. We license and offer as a service banking technology for ledger management and payment processing. I'm in Austin, Texas. Our company works all over the world, but we're headquartered in Austin.
I'm Alex Johnson, so I am at Bank of America, so I'm the wild card, I think, up here. So I actually lead innovation across our Global Treasury Services group, so anything from payables, receivables, liquidity, supply chain finance, commercial card, and our channels as well. So looking at how we can bring those solutions forward for our clients.
Hello, and thank you everyone for hanging out to hear us a little bit. My name is Prashant. I'm the Chief Business Officer of Melio. Melio is one of the fastest growing B2B payments company in the country. We are purpose-built for small businesses. We are a platform company. We power B2B payments for banks and software companies. We are the engine behind Intuit. We are the engine behind Shopify, and we are the engine behind Capital One, for example. Before joining Melio, I ran payments for Chase, consumer and small business payments. I'm delighted to be here.
Thank you, everybody. It's a great panel that we've got on stage. And our topic is to talk about how small businesses are thinking about their payments. Are we looking for a faster experience, an embedded experience, better UX? I think one of the nuances of this panel that we uncovered as we were thinking about it was, for a business, you're not only talking about payments coming into your business, being paid by your customers, but also thinking about payments going out of the business. And we're going to cover both aspects of that today. So as we're talking, we will try and be explicit about which channel we're talking about, in or out. So look, faster, better UX, embedded, this is a good paradigm, but is there a way that we might be actually creating a problem for payments to be run, initiated, accepted without explicit consent? Are we creating a problem down the track by going too fast? I might throw this out to Alex first from a banking perspective, and then head on down the line.
Sure. I actually would say no, I don't think we are. I think what is happening, though, is by advancing the technology so much in payments, we're then forcing us to advance the technology around fraud protection and PII protection and all of those preventative measures of risk that you have to think about. It's forcing us to innovate in different areas. But I actually don't think that this is a bad thing per se. And also I should, caveat that from a bank perspective, our number one priority is always going to be, fraud prevention, protection of consumers. That's bread and butter of who we are. So yeah, that's kind of my perspective from the bank standpoint.
I might pull it back to Prashant and see if you've got the same or a different perspective. Do we need some appropriate friction in our payments from your perspective?
Well, I mean, Melio we started off as an accounts payable company, payment out, and we've now become an accounts receivable and accounts payable platform. I would say I would 100% agree with Alexandra. I would say that we are probably in the second innings of this baseball kind of game on UX. I mean, by the way, how many of you have been small business owners? Okay, one hand, 2, 3. So here's, I mean, if a small business owner were sitting here, and if the small business owner got asked that question from Simone, do you know how you go to a restaurant sometime in the evening and you should notice the owner sitting at the back of that restaurant in the night clearing the bills? And do you know what happens there? Basically, the owner is sitting with a stack of invoices. The owner opens a laptop where he's got an Excel spreadsheet, she's got an Excel spreadsheet. She marks down all the vendors that she's paying to. Then she opens a checkbook. 50% of the payments are still going on checks. And so she cuts out checks, then she puts them in an envelope, she puts a stamp on it. Then she opens QuickBooks, and then she makes an entry in QuickBooks on whether that was paid or not. Then 2 days later, she opens the Bank of America app or the Chase app, and then she says, did the money go out or not? On average, we've asked our customers this question, a business owner spends roughly 35 to 40 hours a month basically managing payments. And so I say, listen, we are in the first or second innings of what the push-ups we need to do. And we are working now very closely with both software companies and banks to try to bring workflow and cash flow in a very embedded fashion in the interface.
Okay. Well, then, following that thread a little bit, if everything's all good on the surface and we've got this embedded UX, payments are running, we're reducing that 35 hours, bank's happy, the fraud's there, John, what happens on an unhappy path where we actually go, oh, there's a refund that we need to do? There's a dispute on this payment. Are we thinking about that enough in the same space as accepting payments, or should we be thinking about it more deeply?
We absolutely have to think about all of that in tandem. And as the technology allows for more and better and seamless user experiences and more real-time transactions, everything that's on the back end, just as our panelists have said, needs to keep up. And with the advent of more advanced technology around AI, machine learning, biometrics, et cetera, vast amounts of data can be analyzed in real time. And so that's happening. Episode 6 actually works with real-time payments today. 70-some% of all of the P2P transactions in Hong Kong, for example, are based on episode 6. And so in terms of reversals and refunds and all of that stuff that is messy in any world, the services that are provided that are accessing the data that we hold are taking care of that, and nothing's really changed. In fact, the experiences for the end user is better. It's much better.
Okay, all right. Well, changing tracks a little bit, the previous panel was all about the challenges in adopting real-time payments in this market. With some exposure to business customers or to a chain where those business customers are involved, do you think that SMBs are aware of these real-time payment futures? What different payment methods might offer them, or are we still really thinking about how do we improve the UX and embed a card-based payment experience? Do businesses want them? I don't know.
I'll go first. Do you guys know that 20% of small businesses in our country are owned by people who only have a GED degree? Okay, so 20% of small business owners, which is 6 million small business owners, actually have just gone to high school. They don't understand the difference between gross margin and markups. How do you expect them to understand ACH, RTP, debit, credit, bill pay, wires, for God's sake? Like, it's so tough for small businesses to understand all these kind of link farm of options. And so when, there's a couple of people from Chase here in the audience that I spoke with. When we were at Chase, when I was at Chase, we were on a mission to create a single payments hub, a single front door for customers, where the objective was to try to get them away from choosing methods of payment. And that's kind of what we're doing in a big way at Melio now as well, which is what the small business owner truly cares for is two things: workflow and cash flow, and the rest of it is just details. And so my sense is that in the next 3 to 5 years, I think together between fintechs and banks, I think we are going to move towards a future, finally, where we will abstract out all these kind of details about methods of payment and honestly just kind of help people get the job done in whichever fashion the job needs to be done. So I'll give you an example. A small business owner gets an invoice. The invoice says, hey, this is a 210 net 30 invoice. If you paid the bill within 10 days, you're going to get 2% return on this money. Terrific. The system has to be intelligent enough to then suggest to the small business owner to pay that today and get the 2%. How it settles, etc., is details.
Okay. What about?
By the way, I'm curious, Alexandra. What's your opinion about this question?
Yeah, so it's interesting because a lot of the customers that I serve are large corporates, but they're working with small business suppliers, right? So one of the things I would say is if this wasn't an issue both for awareness and the value, so that's the other thing too. I think it's one, the small business owners aren't necessarily aware that there's other options that exist, but then two, what that value is for them. if there was more knowledge around that in that space, we wouldn't be using checks probably at all in North America, and we love checks here. So I think that tells you a lot, because we have a lot of corporate clients who are having to pay suppliers, and every part of them wants to get out of checks, get out of paper, and move these people to digital. But it's exactly your point. They all they care about is the workflow and the cash flow. Not that that's all they care about, but those are the things that they need. As a small business owner, trying to think about these different complexities, what appear to be complexities in the way they get paid and the way they move money, is not the priority of what they're trying to do. They're trying to grow a small business. Unless we make that more accessible to them, which, to be honest, I think fintechs, kudos to fintechs, have done a lot in that space of trying to make all of that more accessible, then I think this will kind of continue in the way that it's currently going.
I might pull a question out that we didn't pre-vet, but there's been a theme that we've noticed around here. There's Fraud Fight Club just down the corridor. We've had a lot of discussion about, does real-time payments increase the rate of real-time fraud happening? There's a lot of conversation about how consumers are interacting with these payments. How responsible are participants in enabling businesses to access payment systems, not just RTP, ACH, card, whatever it is you're offering? How responsible and how policed are fintech bank providers in preventing malicious actors from accessing payment rails and sending fraudulent requests for payment or accepting payments under fraudulent circumstances?
I mean,
I'll throw to John, and then I'll come back
I
this
was
way.
just going to say, from our perspective, kind of how I mentioned earlier, that is core to how we perform as a bank, right? We are a federally regulated institution. We have eyes on us all the time is one point, but we also would never want to risk the relationship or the reputation of our customers. So we're very, very careful about those things. So we have different ways of screening when our clients are sending payments out, right? One thing we're starting to look at as well is account validation. So who's sending the transaction and if it's being received by the person you're intending to receive it, right? So that's something that we're focused on now today. And even when we start to think about payments like payments to wallets or more of like the digital payments that maybe are just driven by an alias, that's a whole nother complexity that now we're also thinking about. How do you validate those types of transactions and have and make sure that you're implementing fraud prevention measures? But from my perspective, it's absolutely core to what we do to be able to offer these types of payment rails in a secure way. But you are right that as anything moves faster, quicker, there is going to be additional fraud risk. But it's our job to then determine what do we need to do to prevent that, right? That's kind of our role.
What do you think, John? Do you think preventing fraudulent businesses from being able to access payment systems is going to be helpful?
I think it's going to be extremely helpful for a number of reasons. For companies like ours that are providing technology to the large financial institutions, there are many, many challenges around this, on the periphery. We can't win business unless we've been audited and gone through compliance and reviews by regulators, by the bank, by every department within the bank, if they're a tier 1 bank, and there are many different countries, different parts of the entire community, and not just once, but ongoing. And so for fintechs, it's a challenge to be able to keep up with that, and I'd be surprised if most could. And so from that perspective, the banks that are so entrenched in making sure that their business is secure, they have more confidence in doing business with somebody like us. Obviously, there's resilience and other factors that need to be looked at, access to data, how data is stored and handled and managed, and all of that. But the reality is that compliance probably runs most of our clients, and because of that, I think it's on the forefront of everybody's day to day.
Okay. All right, coming back to Milio. How competitive is the space you're playing in? Are you seeing more competitors come in to compete for your small business customers? Are you seeing Bank of America come in and go, oh, we're going to provide these services to small business customers? Are you seeing every year the tension in small business space gets wider? Or are you seeing a more consolidated approach?
I saw a very distinct no,
No.
when you said Bank of America.
No, because we are going to partner with all the major banks, honestly. That's what's going to happen. There are 30 million small businesses in the country. Most of them have today access to an old bill pay solution that's run on ACH rails, which is essentially batch payments. All of that's going to modernize into accounts payable and accounts receivable solution, not bill pay, where you offer cash flow and workflow benefits. There are 7 companies that are in our space, one of which is us. And if you add up the customer base of all 7 companies today, we are, if you take a guess, we are 6% penetrated. 94% of small businesses do not have what we are building. In accounts payable and account receivable, right now, I would say we are where the small business accounting package industry was in early 2000. For some reason, B2B payments in small businesses are like this frontier that's been left untouched. And our biggest competition is inertia and checks. So our job, honestly, is to work with partners to build great solutions and then to really work hard with them to try to get through the small business operators to say, listen, it's time to change the way you work, which, by the way, is a non-trivial challenge.
Okay, so inertia is the biggest competitor in this market, but would you also think that unless you're particularly geared up to serve particularly the micro end of businesses, maybe the unit economics aren't playing out well for some of the more banking competitors in the market?
Say more.
Say more? Well, it's about you saying more, Prashant, but okay. Okay, so there is a paradigm that if the business is of a particular size, to acquire that customer and then to on-serve that customer is very expensive compared to the lifetime value you're returning. So the unit economics are off, and at scale, that is not a good investment in resources and potentially capacity at a bank. Where we see potentially that banking relationship deepening, and where John might be providing those deeper payment experiences into a bank is at the larger SMB end of the market.
Understood. Sorry, it took me a second to fully grasp the question. So 2 things I would say. First is we took a very deliberate approach to build Melio, where the first innings of our journey was we had to prove that we had an incredible solution that small businesses love. So we built Melio.com, and we managed the business in a way that the CAC had a return period of less than 6 quarters. So we were breaking even on the customer acquisition in under 6 quarters. That number is much lower now. But there is a lot more exciting thing that we've done in the last 18 months, which is we've taken that code and we've platformized that code, and we are embedding that code in a very native fashion inside banking platforms, inside merchant platforms like Shopify and Intuit. So with Shopify, we've just gone live. We have access to 1 million merchants. With Capital One, we are live, we have access to 500,000 merchants. And so the way we've kind of solved this distribution problem is we do rev share agreements with our partners, because we know that if we were to try to serve small businesses on our own, the economics just doesn't quite work to scale. By the way, it's not just economics that matters. Small business operators and owners do not like to learn new systems. Small business operators and owners have their preferred, if they love the Bank of America experience, and if that's where they spend their time, then they want our solution to be there. If they love if you're a Shopify merchant and you're running your store on Shopify admin, then you want bill pay and accounts payable to be in there. They don't have the mind share for you to kind of say, listen, I've got one more app for you. I've got one more thing for you. So our whole philosophy is, listen, we built something really good, and our job is to try to bring that solution in context, and therefore we are embedding what we built. And so in some ways, we are the Stripe for B2B payments, basically.
Okay.
I wanted to just say something that ties to what you were saying earlier around the B2B payments isn't really a focus for change for small businesses. And part of, if you think about it, right, and it kind of goes to what I was saying earlier around a lot of checks still existing in the system, there's, the counterpart in a transaction isn't forcing it, right? But if you look at the consumer side, the reason you see so much innovation in this space and things moving fast is because consumers are demanding it. And corporates have to serve those consumers. So there's less of a force, I think, pushing that innovation and that move from a B2B perspective. So a small business can continue to operate in the way they are without having as much pressure to change those processes.
Okay. Let's imagine for a moment that we've fast forwarded a lot of change management. We might still have a little bit of checks, we might still have cash, it's very nostalgic, we love them here. In Australia, we are moving towards completely getting rid of our old bank account payment system. There will be no more batch files, everything's moving to ISO standards. We've got about 5 or 6 years to get there. It's possible that as we move forward, people will start to see the advantages of that real-time experience and all that an ISO messaging standard can bring. John, do you think that might have cracks appearing in all of those connected systems that small businesses have today? We're thinking about accounting, we're thinking about inventory management, anything that requires a payment result to come back, or even, on the other side, we're doing payroll through batch files. Do you think that's being well considered now to plan for that change to come through?
I'm sure there are those who are considering it, but I don't think it's well considered across the board. There are so many disparate systems that have to connect and come together and speak to each other that it's an extraordinary challenge to put that together. And every time there's a connection, there's something that can break. And those ISO messages, if it's ISO 20022, there's so much data that can come in. In many cases, the certification for ISO 20022 is a light version where the message spec is just being translated into that user's interface. And so a lot of the benefit in the data isn't going to even be stored. So I think that, I also think that if you look at, there's a lot of talk around super apps and how that's connected merchants and consumers. If you look at how WePay evolved, it evolved from a WhatsApp, it was a twin of WhatsApp. And the owners of WePay, Tencent, decided to add things to it. They had the customer base, and it sort of organically developed into this massive operation. That doesn't use ISO except for money in, to my knowledge. So it's ISO 20022 is the spec is 10 or 12 years old. Things change over time. So by the time we figure all this out, hopefully the systems and the technology that's been deployed is going to be able to adapt, because the rate of change that we're seeing now is only accelerating. Mm-hmm. And so we'll get ISO 20022 right. When? Has anything changed? Yes.
I think when we were talking about this in our prep session, I mentioned that I think there's going to be a period, and this is very much showing my age, but when we moved from cars that could run on leaded fuel to everyone has to do unleaded, and everyone plugged in catalytic converters to our existing cars, and that was then able to run on the roads for a little bit longer and use the new gas. So I think that we might see a few catalytic converters potentially to bring existing systems up to ISO.
Yeah, 100%. We're seeing that today.
I mean, I was at JP Morgan when we launched RTP, and I was on the consumer side of the business, CCB, but our treasury services colleagues were very actively trying to figure out how to take the RTP, RFP solution to large billers, insurance disbursement companies, healthcare companies, early wage kind of disbursement players. My sense is that what you will, and by the way, when our treasury colleagues were out selling RTP and RFP, they were doing the push-ups to try to figure out how these integrations will happen at the back. So if you are Nationwide Insurance, for example, and if you want to use RFP, for example, to send you a bill, and if you want that customer to pay you by RTP, JP Morgan's treasury services teams were actually building the plumbing so that that payment will reconcile with whatever accounting system was sitting at the back. And JP Morgan also, for example, bought Instamed, which was the healthcare billing acquirer. And in healthcare, they were out trying to basically build these bridges. So to John's point, I fully agree that you will start seeing the bridges being built with the business management systems. But I think what you will see is that will happen in pockets.
Okay.
I think it's just not going to happen like en masse.
Okay, bringing it back to our SMBs, our restaurant owner, what happens if those pockets mean that there's a mismatch in how they are making payments versus how they're getting paid? Do you think that there's a case that some small businesses are using checks and potentially in some cases ACH as a way to hedge between when they will get invoices coming in and when they're actually technically making payments? It's not a small business, but I had the pleasure of sitting beside a construction industry lawyer on the plane from LA to New York, and he was very happy to talk about his industry. But he mentioned that checks are huge in construction because they're a way for a subcontractor to receive a predated a surety that they're going to get paid. Yeah. I mean, the check might still bounce, but you're going to get paid. Because we don't run checks in Australia, we've requested our construction companies of a particular size to escrow 30% of the total construction cost. That way, subcontractors have some guarantee. If we are moving in real-time payments here for small businesses and they're starting to have to send money out faster, what happens if their onward payments don't match? Are we creating a cash flow shortfall? What's going to happen? Or do you think that we'll see them hang around for longer just to keep that gap filled?
Well, I would actually say that real-time payments do help you to hold on to your cash longer because you can make an on-time payment, right? So you don't have to pay until the last second that you need to pay, right? So there is that benefit there. Like I do know what you're saying where, maybe the check gives you some lag, but the real-time payments does actually give you, because the thing that's different about real-time payments is you know exactly where your money is the whole time, right? So it gives you some more control over that.
But what happens if you make a real-time payment because you need to, it's due, but your customers are still paying you via card, and that's, might settle. Is there a way that we can buffer that, John? You look like you've got something to say, maybe not.
I was just very interested in your answer. A lot of this is tracking money in, money out, making sure you build rules around the account structures, and that's sort of our bread and butter. And I think that there's ways to figure all of that out. And some of these problems are new, and nascent problems don't always have an answer. But I'm not familiar with a lot of problems in the countries where we're doing a lot of work around real-time payments.
Okay. I'll just hold that thought, don't lose it. We've got 10 minutes to go. I've just seen the Slido QR code come up, so if you do have any questions for SMB or adjacencies as we've gone into, please pop them up. We've got 10 minutes left and we will have time to take some. Go, Prashant.
Well, I think back to the two principles of cash flow and workflow. Mm-hmm. I just want to provide a window into what we are doing to solve some of the problems you said. Melio is also embedded inside a construction software platform called LendIt. Mm-hmm. And what happens is that in construction, since you mentioned construction, the general contractor sends a lien waiver to the subcontractor. And when the subcontractor signs the lien waiver and says that, I've completed the job, the GC pays the subcontractor. Normally, all of this is like asynchronous. It's not like different information is flowing in one side, emails are going in some other direction, and then checks are happening. All of this is coming together in one platform in LendIt. And so I think we clearly see this now, which is industry by industry, there'll be a confluence of workflow and payments. Mm-hmm. Okay, so that's like the first thought. The second thought is that we have delinked payer and payee's preferences. Back to your earlier point, a small business owner actually wants to pay by card even when the vendor does not accept cards. It happens all the time. And we've kind of said, okay, great. So you can actually pay by card and we'll be the merchant of record. And then we take that money, we move into an FBO account, and then we push the check payment to the vendor. And by the way, the vendor gets an email saying, listen, a check is on its way. And click here if you want to convert that check into either an ACH payment or an RTP payment. And so even as the money is traveling, you can actually convert that payment. So I guess my point is that all of this, the fact that all these payment types have different hydraulics is actually going to come together in simpler systems that recognize that payers and payees have different preferences for payments.
Would you say it's going to be better, faster, and embedded UX, as the title of the session might say? That would be good. That would be a nice little bow. Okay. There's actually a question that's popped up that that does track with one that I wanted to ask. How price sensitive are SMBs? Do they care if one particular payment rail is more expensive as long as it gets the payment done quickly, or are we seeing more or less price sensitivity given the inflationary environment we've got going on?
I mean, I can start. I actually don't see that very much because if you think about like paying by card, interest is high, the cost of doing card transactions is higher. If you think about check, those are not cheap. Checks are not cheap, the postage, all of that. But I also think part of it is they may not know, right? Like I don't know if there's also the knowledge of what are all the options and what are the costs behind them, right? So.
Did you have something, Prashant, to add?
We have, I fully agree. We have so many instances where once the small business owner understands the terms of the invoice and the options that the small business has, they'll actually make different choices. So yeah, I can pay 2.9% to make this payment with a Bank of America card or a Capital One card. But by the way, I get 200 points back on the card. And da-da-da-da-da. And then, by the way, if I pay it today, I get 2% back because it's a 210 net 30 invoice. So I think that, honestly, the trick is to simplify all this in a way that the small business operator really understands in simple, really simple terms what the options are.
There's a question about virtual cards on the board. What kind of traction do you see virtual cards getting with SMBs? One of the things that I've noticed here is that there's so many cards available. You walk into a shop and they're like, oh, do you want one of our cards? Do you think that this is going to continue to increase in velocity, or are we moving towards digital cards? How are we going to work?
The virtual, I mean, Bill.com is a public company, so they give their numbers. 2.5% to 3% of their TPV runs on virtual card. I think virtual cards are great. Virtual cards, we have tons of suppliers who want to get paid with virtual cards. The value proposition is very simple. It's secure, and it's secure, and B, it reconciles with the workflows that they have already in place. And there is a ton of small businesses right now who don't have a back office person who's doing the reconciliation. So they are just kind of like, great, just send me a virtual card. I have a point of sale system. It reconciles with my QuickBooks. And so this money is going to basically just come back in. So yeah, I would say in the zip code of 2.5% to 5% of the volume can transition to virtual cards in the small business space in the next 3 years.
Okay. John, do you assist banks to create virtual card issuing or acquiring?
Not acquiring, but virtual card issuing we do. And actually, we're seeing an uptick in the demand for modernization requirements around virtual card platforms. And so, and then adding installments or BNPL to those virtual cards.
I wasn't going to bring up BNPL, but you've said it.
But that seems to be something that wherever we go, we get inquiries around. So there's definitely, and you know, none of that is really rocket science. It's just, from our perspective, folks are looking for ways to upgrade and modernize so that they can work in tandem with the workflows and other elements that will keep the SMB owners able to operate.
Okay, all right. We've got 3 minutes to go. That last question I feel like we dealt with when we talked about the nature of payments coming in and coming out at different rates. With the last 3 minutes, if you were going to start a small business today, what would that be? And how would you be accepting payments if you were allowed to accept payments on one rail? One rail only. I should have prepped you for this question. I just thought of it, but I thought it'd be a fun way to finish. So
I would just say that our job is to try to make that question not relevant for small businesses.
What are you going to sell, Prashant? What are you going to sell at your small business?
You mean in terms of goods and services?
Yeah,
or?
if you had a small business, what would you do? You think about it, Alex. Do you have an answer?
Well, it depends which Alex you're talking to. Younger, more active me, I would have said, I'm going to open a cycling studio. I have a name. It's called One Ride. It's going to be great. Everybody, if you ever see that name, it's me. I've done it. But if you talk to today me, come on, I'd start an AI company, of course. Right. Who wouldn't right now? I'd get money with just an idea, right? Okay. So that's where I'm at.
Okay, John, what are you selling in your small business?
That's a great answer, by the way. I was going to say a surf shop, but I'll pivot. I think I would open up a coffee shop that's right beneath my building, so I have a place to go in the morning.
Fabulous.
Yeah.
I also love that you said surf shop and you live in Austin, Texas.
Yeah.
Where are you going?
There's actually a wave pool somewhere out by the airport. Okay. Yeah.
Prashant.
If I wasn't doing what I'm doing, I would be a sports blogger, because that's just my thing. I love sports and I love understanding sports. I honestly think that there is a massive opportunity, in my opinion, if I was a small business owner, to expose the world to the milieu of possibilities so that they can enjoy sports experiences. It's the NFL, it's the Wimbledon, it's the NBA, it's the Cricket World Cup, it's the soccer, it's just the F1. There's so many amazing experiences. Nice. And I'd love, maybe if I started a company, that's what I would do, and maybe become a Shopify merchant.
Well, I would open a pick your own mushroom shop where you could go in and there'd be like walls of mushrooms growing that you could go and pick off. I think that would be an interesting shop. Yes. Okay. I think there's still happy hours going on outside, so it's very much a happy end to the first day of Fintech Nexus. Thank you, John. Thank you, Alex. Thank you, Prashant. It's been a pleasure being on stage with you.
Thank you.